everyone, and welcome. Thank you for joining our US election special, our technical analysis webinar this week. Although we've got a lot to get through, we will still aim to try and get done in 30 minutes. This week and from now on, we will be providing attendees with a quick guide to Trevor's charts. You can download it in the Handouts tab of your GoToWebinar widget. This handout will explain what each of the indicators are on Trevor's charts and will provide a bit of insight into the workings of his mind, what he's looking at when he's looking at the charts. So if you just click the Handouts tab, you should be able to see it there and you should be able to download it. For those of you that don't know him, Trevor is a veteran trader and technical analyst. He's also disappeared. I don't know where he's gone. He works at companies like Merrill. Sorry, Trevor, he disappeared there. He works at companies like Merrill Lynch. He was global head of technical analysis at Bloomberg. So very experienced traders, nearly 50 years experience. I'm very happy to have him here today. For anyone who hasn't used GoToWebinar before, please use the questions tab to answer your questions and try to keep your questions on topic. Like I said, we've got a lot to get through today. I'm not even sure if I can introduce all of this, Trevor. So many bullet points this week. Why don't you just take it away and we'll find out via you. Thank you.
Okay. All right. Thanks, Dan, very much indeed. Welcome, everybody. Thank you very much for spending the time with us for this half-hour session. The first screen this week did a little bit different, but it's just looking at the background, what happened last week. There was a very, very clear message last week. At the down at the bottom here, you can see the dollar strong, Bitcoin rampant, and then everything else weak against it. So that was the dominant theme last week. But here we are on Monday, where there's been a bit of a bounce after that. So let's go to the charts now and get started at the top. So we'll start firstly with the euro. Euro, of course, last week, I'll just go on to the weekly chart here, and you can see the importance of the level that we're approaching on the euro, this 116 level here. The September lows are being challenged because of this dollar strength. This will be a very significant level because this is a long-term chart, this is a weekly chart, but look how fast we moved up in this period here in Q3 and Q2 last year of this year. It was a very, very rapid move up in the euro, and this would be if we broke these lows here, we'd have very, very little support. We've got some support here, I've got a lot of support here, of course, but basically because very little trading took place, that means there aren't many short covers or profit takers, sorry, in the market. So it can go quite quickly from one level to the next congestion of trading activity, which I would think would be down around 113.5. But the key thing is, will this level break? Will the 119, I'll round it out, level break? Going back to the daily chart now to look at it, here's how we're looking. That's the level there, and we're approaching it now. This is today, of course. It's a daily chart here, and this is today, and we're approaching it. So how do the technicals look as we approach it? The ADX, which many of you will know, is a measure of the trendiness of the market, is low, and so we haven't got a strong downtrend in play. The RSI, with my sample of 7, is quite low. It's not extremely low, but quite low, and so we're not deeply oversold, but we're sold off hard. And in fact, you can take this low reading as a message of weakness. If we come up through my lower line here, which I put in at 35, I use 7 periods. I have lines here at 35, 50, and 65. If we came up through there, then I think not I think, but I'd be confident that we are holding this 116 level. But if this keeps on coming down as it is and making new lows, then I think we'll give way. So watch it. Look at the behavior of the Bollinger Bands here as we approach the line. They're splaying out, they're widening. This means that the volatility is increasing as we're approaching the support level. And that's the kind of look that we need for a successful break. If the volatility was declining as we approached an important support level, then I would say it probably wouldn't break. So only time will tell. As technical analysts, we observe the candles looking negative. It's not particularly accelerating, but it is weak at this point, and this is a very important point that it must hold. If it breaks here, then I think we'll slip quite quickly to here, but we may hold. Next on to
Trevor,
yes,
got a quick question.
Yes, sure.
Quick question. As you can imagine, people are excited about the election tomorrow. Just a quick question. What do you think the direction of the dollar might be in both, depending on who wins the election? So
who wins the election? Well,
I remember you saying that you might think it would be good for both, possibly.
Yes. Well, it's here. There are a combination of outcomes, aren't there? After from tomorrow, we've got a win for Trump or a loss for Trump. We've got the two houses. So the upper house and the lower house. So if Biden, for example, won and took control of both houses, that's one outcome. Let's say that we had Biden win, but Trump retained the upper house, or we have, well, any of those combinations. But there's another one, and this is the worst one of all. And this one is the one where I'd be confident that we hit the dollar. The other ones, I think any of the combinations will be to a greater and lesser extent bullish for the dollar. But one that would not be good for the dollar would be an outcome where we have a disputed outcome, and it looks like it would be long and legal battle lasting months to decide who is going to be the president. Now, if that is the outcome, that the market hates uncertainty, and I think that would be bad for the dollar, and particularly the stock market. The stock market in particular would be sensitive to that. I know, we've got the polls. The polls say what they say, Biden to win, but it's sort of narrowing up a bit in the key states as we approach the day itself. We know how polls can get it wrong. Think of Brexit. Think of Trump getting into power. So the sort of leeway for error there is quite large. So we just have to wait and see. But I can't see that any of the outcomes, if they are simply a win or lose for Biden or Trump, will be particularly catastrophic for the dollar itself. The dollar is getting strength from other things, fundamental things, a flight towards safety, and it's taking on that role. So I think that we are going to have a steady dollar unless we get that terrible outcome, which would be the worst of all cases if it's a disputed outcome. Let's say tomorrow Trump declares himself the winner when all the votes haven't been counted and the postal votes haven't been counted, and then we go into a series of legal challenges, which could, in America, can last many, many months. So I hope that answers the question. I suppose the answer is nobody knows.
Thank you, Trevor. Thank you.
Okay, so I'll move on to sterling. Sterling's got its own nobody knows side to it, which is Brexit as well, plus a new lockdown that we've got here, which is bad for the country. Let's put it that way. The noises seem to be favourable towards there being a Brexit eventually agreement, but probably this week we won't have any new particular concrete announcement in it, so it will still remain in the air. So what do we see in the chart? I prefer to get much more clarity in the chart. So this is a weekly chart, so each bar is a week here, and so we had that weakness in sterling, but it's a remarkable how sterling is really ranging rather than it isn't being sold off too hard. We had this level here at 127, resistance here became support here. Likewise at 130, we've got support, which has now become resistance in the market. We've got this very, very massive and important level at 133, which is way above us. But we're trading in looking like being contained by this range, 130 at the top and at the upper end of it with 129 at the bottom. The sterling itself, as we come to the daily chart, I'm just going to take that off. You don't need that now because, as Dan told you, we've got a help document which tells you all the lines that are on my chart and the values I use for my samples, for my indicators. So I'll refer you to that. So I'll take off labeling the 50-day average because you know that's a 50-day average now. So what we've got is the sterling moving down towards this short-term support level, which is a 61.8% retracement of the move up from the September low. And so if sterling were to be going up, then this is really the last place where it should hold. You know, if it extends more, retraces more than 61.8, it's not really very strong. So far today, the action has been we traded down, we hit the 61.8% level there, which was also that established support level at about 128.50. It's got somewhat of electric shock there. You can see quite a positive candle there, and it's bounced from it, and that is probably indicating that it's going to hold it for the moment. So this looks like it doesn't want to break. We haven't got considerable power. Look at the behavior of the Bollinger Bands. They're more or less parallel, so there's no increase in volatility as we approach the support level. So in my interpretation of this is this attack on this support level at 28.50 is going to fail, and we will hold it and we will remain range bound. And I think that might be the tone for the rest of the week. I want to very quickly go to the NOK, the Norwegian crown, because it's at a very important point here, and you saw how it in that early first slide I showed you of the performance, how outstanding it was. So this is US dollar NOK, so going up here is dollar strength, and we're seeing this dollar strength, and look at these important levels that we're approaching here. And this is one, if you were wanting to capitalize on the dollar strength and choosing a security to benefit most from it, I think it might be the NOK.
So Trevor, just to confirm, not the NOK is the Norwegian crown, is it correct?
Yes, it is. Yes, sorry, excuse me. Saying that. Yes, so you can see here, look at this high here at the end of September, and we're testing it here now, and look at the shape of Bollinger Bands. The upper one is going north, the bottom one is going south. The volatility is expanding as we approach that. So this means it's like, think of this level here as a brick wall, and we're taking a run at the brick wall. We're actually taking a run at the brick wall. Whereas on sterling, when we were looking at that lower level there, which was a support level, we was kind of dropping to our knees as we approached the brick wall. It was unlikely that we would make that break down in sterling. But here, I think the likelihood is that we've got a good chance of making this break, going through the 960 level, and then that can release a lot of energy. That we saw in the weekly chart. Look at this here. There's nothing up here to stop it until we get up here to about 1020 to 1060 area here. So the move from here to there could be fast there. So this could be, if you want to leverage a break in the dollar, if you agree with that, the dollar is going to continue to follow through. This might be one of your best ways of capitalizing on that. Going to the commodity currencies now, this is the Australian dollar, perhaps forming this triangle here on top of the big run up on the Australian dollar. Looking at the daily chart, we've got a very crucial point that we're at now. This is the 70.70 level, resistance, big break here, stayed above it for several months, came back exactly. The strong resistance became support. We bounced from it. We bounced from it, I would say, a second time, and now here we are at the third time. So what's going to happen here? Is it going to break, or is it going to hold for a third time? I think that it's going to hold for a third time. The Bollinger Bands are not really expanding, so we haven't got volatility. These candles individually, these doji star, long-legged doji type candles, are not the candles that you get if you're going to make a successful break. And the RSI is turning up from the low level. So my bet here is at this level, the 70 level, is going to hold again at this time. Just a quick glance at the rand. I want to talk about this more in the future, but we've got this very important level at 16, round about 16 to the rand, and look at that here, and that's being challenged there. 1, 2, 3, 4 times we've been there since June. And so this would be very, very significant. And what is worrying is that we've got a series of lower highs here. So the pressure is on the downside to try and get through this lower level. Not sure it's going to happen now. In fact, I don't think it's going to happen right now. But I think that this is a very significant level that is under threat. And though it may not happen this week, I think that you know, it could eventually give way, and that would be very significant indeed. Okay, let's move on now to the. Oh no, we missed one, the big one, Bitcoin. So let me go to Bitcoin. I count that as a currency. So Bitcoin. Let's just look at the weekly chart here to get to the wonderful picture that we've got here. I'm just going to bring back the 2017 high in here to get the context of where we are now. So we have powered ahead in the last couple of months incredibly, and we've broken really the serious resistance was at 12,000. We've lurched up to 14,000. We've got the previous high, which is not a serious resistance point here. We were very briefly at that level, so I don't think it's actually going to offer any serious resistance. The Fibonacci levels that I've drawn in here, and you might wonder where they've come from. They've come from this. I started off, it's a projection. So when we start from, if you like, the beginning of Bitcoin down here at this low of 300, then up to the high here, and then pulling back to this low here, and then projecting up from that. So we did stop at the 38.2% projection level here, and we had resistance, then break, then support, pull back and support. The 50% level, I think too, you would agree, has offered resistance, but I think we're on our way to the 61.8% level here. So that's close to, it's a 14,600 there, and then up here is the next swing. So I think if we do manage to break that, and do manage to break the previous high, which in itself was not a big consolidation. It was very, very brief. It was really in days that was a whole pattern was made. So it's not a significant resistance level, apart from the fact that it's very, very psychological because it's the previous high and it's so close to 20,000. But the next swing would be right up at 21,700. I'm not saying it's going to get there, it might be a Christmas present for me or anything like that, but let's be bold. You know, it pays to be bold when it comes to Bitcoin. So the action at the moment is a little bit of a slowing up as we approach this resistance level at 14,000, and so we've definitely lost some momentum here. The RSI is drooping a bit, but the trend is strong. And I think that any correction here will be a great opportunity for moving higher and higher. Now let's move on now to the stock indices.
Oh, we just have a question, Trevor, on Bitcoin. Do you have time to answer it?
Yes.
I'm afraid it's quite a long question, and I've only half read it myself, so Let's see. How much of a role do you think technicals play with Bitcoin, considering it doesn't have that historical data to rely on and is being heavily affected by hype and investors treating it as a new safe haven instead of gold, etc., especially with the pandemic and the upcoming election in the US? That question is from Brady Hillhouse. Thank you very much for your question.
Okay, Brady, that's a really good question, but here I'm going to answer it very emphatically. I love Bitcoin from a technical point of view because it's a wonderful market. What makes Bitcoin go up is only sentiment, is only driven by two fundamental drivers, fear and greed. That's the only things which make Bitcoin go up and down. It doesn't have any fundamentals at all. So it's not spoiled by fundamentals, if you like. It doesn't have hurricanes and crop disasters and things like that. It is just driven by greed. The size of the network is the driver of the price going up. So because it's so driven by sentiment, it behaves extremely well from a technical point of view. I have to resist using chart patterns that I found on Bitcoin when I'm doing courses for other people who are trading oil and trading the currencies and things like that, because they're beautiful in Bitcoin. It behaves exceptionally well from a technical point of view. You know, one chart patterns for your album of great chart patterns, you'll get them in Bitcoin. Why? Because it's not spoiled by fundamentals. It just is driven by fear and greed. It's in its purest form. And so I think technical analysis, I would argue, and you know, it's got the advantage of liquidity also, is best in acts in its best and most obedient and perfect form in Bitcoin. And so I'm a great fan of it from a technical point of view. I'm a portfolio manager, and I've been studying a lot about the correlations between Bitcoin and other things, and it's got a mild correlation with gold, but not a strong correlation with gold, and it hasn't really got any lasting correlation with anything else at all. So for me as a portfolio manager, having equities and commodities and bonds and so forth in my portfolio, this is an ideal risk reduction because it is not correlating with the other things in my portfolio. So I love Bitcoin. I really do love it as a technical analyst. So I don't think those people say it won't work because it's driven by, actually those things are just psychology, and Bitcoin technical analysis works best when it is reflecting market psychology in a liquid condition. I hope that answers your question. Thank you for asking.
Yeah, he says great answer and thank you.
Okay,
we actually have just another quick one as well, just from Karim. He says, what's your favorite coin? Is it Bitcoin you mainly just focus on?
Yeah, it was Bitcoin I was just talking about, and I'm keeping with Bitcoin. Bitcoin is, as you know, is in the whole galaxy of all the hundreds and thousands of different coins there are, but of all the liquid, let's say the liquid 100 of them, Bitcoin is more than 45% currently. May not be exactly the right number, but it is the majority, and so it is the benchmark one. I'm surprised at it. I would have thought that, there are many better coins. We know that, those of us that understand this. If you were starting again, it wouldn't be this one. You'd have done it better, but still, people sticking with Bitcoin. And if people stick with Bitcoin, then I stick with Bitcoin. I'm not going to say you should be doing something else. They're not. I stick with the thing that they're doing. The liquidity is in Bitcoin. I happen to prefer other coins, but what I think, it doesn't really matter. So stick with the liquidity, and but watch that ratio, because of course there's nothing fixed about this, and it can easily change. Ethereum could take over, Stellar, or one of the other ones could take over. So watch the ratios. The wonderful thing about this being a digital currency, there's a massive amount of data in it, so we can study all these things. Okay, so I'll go to the stock indices. I've got 5 minutes left, so I'll have to do it fast. I'm going to start the US 500 here. Again, I'll start with the weekly chart, and what I'm doing here is I'm noticing that the MACD has crossed. Here the RSI has come down. We have this is a what I did here with these Fibonacci levels is I took the low here, the March low, then I came up to this high, and then this being the most significant pullback that we've had until this one that we're having now, or the projections ahead, and so we seem to have stalled at 50% from this A, B, C, D move here. We've come down, they're not a double top, but the tops are spikes, so they're going to act like a double top. So this means the 3,200 level is extremely important that it must hold. We had that savage sell-off last week. Look at that enormous black candle. We have only had a few ever like that. You know, 2 in the big collapse in March, and we had one of those last week, and now we're bouncing a bit. So let's have a closer look at that. So we've come back to the September low. We tested it, we rejected it pretty well. It wasn't a very positive candle. We have got a shadow below, but it was a black bodied candle, and we're a little bit above it. That is not particularly a strong action. The gapping down was very weak. And so I think this is just a sort of collecting our thoughts here in a weak market. So I think this market is weak, and it will tumble lower if we break this September low. We haven't done it yet. The election is a wild card for us, so we could all bounce from here and we could all shoot up, or we could collapse. But the trigger is the 3,200 level here to give us that message that we're on our way down for another significant leg. It's not a good looking picture. You know, this would then, you would say, well, I'll call this a double top. I know purists would argue, but if we take this high and the low in between, and 1, 2, 3, 4, 5, 6, 7, let's say, 1, 2, 3, 4, 5, 6, 7, I'm swinging down from the break point to the 2 highs downwards, and that takes us well below 3,000, down to 2,900 would be the call from that chart pattern. So watch out for that, and don't forget, you know, yeah. So with a dollar move, a sizable dollar move, that could be the trigger. But so if you want to see bad things, let's go first to FTSE, but the worst of all will go to the DAX. The FTSE. We've got this pattern of lower highs. We've been watching that. Sorry, let me start with the weekly. I put in the measurements here, the pullback that we've had from the March low, and then measuring, just a note that we stopped the 5,520 low was a 61.8% retracement, which was very pleasurable to us technical analysts. But look at this series of lower highs here. That's a pretty bearish structure that we've got, and we've made a breakdown, and this makes this market very vulnerable to going much lower. So yesterday we're quite strong as a reaction to last week's significant drop, but you see the RSI has come up here through 35, so this indicates that we're going to pause here. But the structure of this market is very bad, very poor indeed. But if you want to see really poor, go to the DAX. So the DAX weekly first. We talked about this, the head and shoulders pattern. We had a number of head and shoulders we were talking about last week. They've come to fruition. On the DAX, it was actually on Monday, on the day I was talking. But here we had the high, the higher high, the lower high. We were talking early in the day, or before the significant sell-off started on Monday, but then we tumbled. And so this is the breakdown from the neckline. The minimum price objective, which I put up last week, is 11,100, and I do think we're headed towards that. We've got some support in here and the filling of the gap in here, so I do think we can get it. And one of the things that made me rather bearish was this lower high pattern as we were forming the head and shoulders pattern there. So now we've got, look at the daily chart. Here's the left shoulder, here's the head, and here's the right shoulder. It's a very broad pattern. It's not very tall pattern. I've got to say that this head is only just a head, but we broke down here and then we tumbled from that with a gap. That's very bearish. Gaps Markets don't like to leave these vacuums, so no surprise that it's an attempt to fill it here. Here we are on Monday. Look for any weakness Tuesday, Wednesday in this market, and not filling the gap as a sign that this is a pullback attempt which is going to fail, a dead cat bounce type behavior. So look at it. It is a strong day today, but the next couple of bars will tell us whether it's going to fill this gap, and I tend to think it will not. It's just correcting the deep oversold condition temporarily, and then we'll turn down. I think we'll go to the that minimum price objective or lower, in fact, as well. And then I got one more to do, which is crude. Sorry to overrun. So let's go to the weekly chart on crude firstly. This is December NYMEX crude, WTI crude. You can see how we've turned over here. You could call it head and shoulders if you want, or a saucer pattern, but it's definitely been turning down. We had that terrible week last week when it broke down through these lows, these important lows here at $37. Let's have a look now. So here's the $37 breakdown point, and I have drawn this Fibonacci level in here, taking from the high to this double bottom here at $37, then to the bounce high from it, and then projecting down from it. Now you see that today we actually reached the minimum price objective from that A, B, C, D move there. So that's completed there. So it's not surprising that we're bouncing now from that, because it's completed the 100% of that move. So we have to see how it's going to behave in the next couple of bars, whether this bounce develops. The RSI is still below 35, not come up here, so it can consolidate a bit more, and then we'll see whether it's going to return into this resistance area, because this big congestion from 37 and above is considerable resistance for the market, so it's going to struggle to punch into that very hard. So we'll see whether we're going to have another leg lower or not. Next few days will tell us that. Right,
thanks, Trevor.
Thank you very much.
You have got to the end. We've actually got 3 requests for 3 different charts. I'm not sure if you've got time to maybe look at one of them.
Okay,
we've got Canadian request for the Canadian dollar, request for the Canadian dollar, Euro, GBP, or gold.
Okay. All right.
So you just
yeah, I've done the Canadian dollar. I didn't do it this week because last week we covered it, and we've got these this very significant level. This is a weekly chart again here at 113, which is absolutely dominating things. It's a band really here. It's a major support zone. We bounce from it, and that's the bounce that we had last week in it, and so we've moved away from it. But still, we're dominated by a pattern of lower highs going on here, and it doesn't look good at this point here. Short term, it looks it's just turned down through the 65 level. So if you're a short term trader, that would be you'd be looking for it to go lower again, but back towards the 130 level, and once again a big test of that very significant level. And it's it's a multi-year support level, so it's not going to give away easily, but maybe it will give way, and it will have a very profound implication if it does. I'll do one more, and I'll do gold because it's a different asset class from all the things we've been talking to up till now. Again, I like to start from the weekly to get the context. We are dominated by this descending triangle here. The big round number, of course, there, $2,000. We went up to 2070, and then we've had a series of lower highs ever since. The bears have been pressing. Every rally is being sold in by the bears, and then we've got 1, 2, 3, 4 times around the level of 1850 the market has held. So this triangular shape is very important and very significant. Very often a descending triangle that, like this, breaks to the downside, and if it does, the break will be violent. And that, I would have no doubt, if we take out that, finally take out the 1850 level, that will sink fast to about 1750, the 50% level here, and this consolidation down here, because there's nothing in that there. We were, we traded very, very fast through that zone there, so there's no support. So here we are at it now, gone to the daily chart. We've just come up through the 35 level here, bounced again, and maybe I should draw this line in, the horizontal line in here. So we're still holding it, still contained by the pattern of lower highs and the horizontal pattern of the lows, and so we're still contained inside that triangle. But the overall shape, a descending triangle, is more bearish than bullish. But we have got a good idea of where the I've made this line dashed because it hasn't got 3 points on it. It's just an indication of lower highs. But as soon as we break this pattern of lower highs, and the first trigger would be breaking 1935, that sort of area there, then we're breaking up out of the pattern. But just marginally, more often, we break down from descending patterns. It's more usual to break down than up. Not say we must, but my hunch would be more likely down than up. But obviously I'm flexible. If we break up, I'll follow it. If we break down, I'll follow it. But the horizontal line means there's a lot of shock value in the breakdown, because nobody is short lower than that level. So nobody is making a profit if we break down through that horizontal 1850 level. So there's a lot of shock value there. There isn't the same shock value here, because as we go up here, people are profit takers as we go up through this level here, but not through. So at a horizontal, when we break a horizontal line like a descending triangle, and that's why they are so significant. I apologize for overrunning, but thank you very much.
No worries, Trevor. Thank you so much. It's a fountain of knowledge for us all, I think. No, thank you very much. Join us again, everyone, next week, same time, same place. I suppose when we'll know who the US president is, or will we know? That's the question.
Yeah,
we'll soon find out. Yeah. Trevor, do you have anything to add?
No, I want to thank you, and I want to thank you, Dan. I want to thank those of you that have joined us. I appreciate that very much, for you generously giving your time, and I will end with my blessing. May the trend be with you. Bye-bye.
Thanks, Trevor. Thank you, everyone. Bye-bye now.
Bye-bye.